Hello, everyone. So, you guys won't believe what happened. So, I know I am running very late, but I was on a different channel, apparently. Different channel, not in the Barter Black organization, but I was in some support at Barter Black channel. And so it wasn't necessarily linking me to all the Barter Black for the actual mastermind. Lo and behold. So lesson learned, right? Technology will get you all the time. You love technology, but technology will get you all the time. So, hello, everyone. My name is Myrna Laine-Hyppolite, and I am a financial wellness coach, an investing coach, wealth creation strategist. I really focus on helping powerhouse women build their wealth by investing in the stock market. So, without further ado, we're going to get started because I know my time's been truncated based on my technological issues, but we can make it happen. All right, so if you guys have questions, feel free to put them in the chat. Hopefully I'll be able to see them. Okay, so investing in the stock market, what's true? That's what we're going to cover today. First, I got to give you my overall disclaimer, which is Empower Financial Wellness partners, myself, we're not investment advisors. So as such, the information in this presentation is going to be purely and strictly for educational purposes and does not constitute investment advice, right? You make your own investment decisions and you make your decisions and you decide what you want to do. All right, so this is me, Myrna Laine-Hyppolite. I know I look young, but I have about 30 years of experience in the finance realm. And I'm an Ivy League graduate, bachelor's and master's degree from Dartmouth College. I am chief financial officer for a network of about 90 charter schools and a financial wellness coach. As we mentioned, I help powerhouse women turn their amazing income into their first million in net worth, even if they're new to investing in the stock market. So let me tell you a little bit about my story so we can get better acquainted. So I grew up in a Haitian household, a Caribbean household. And in order to determine success, you know that you've made it if you worked hard, you went to college, and you got a good job. That's what I call the trifecta of success. If you're familiar with that trifecta of success, give me a success in the chat because that's what was considering a success, that you've made it. But that really wasn't it, right? I got out there in the world, got my college degree, got my master's, but I was overwhelmed. I didn't know what I was doing with my money. I was a little bit confused, clueless. I did some pinching and sacrificing. These actually are two pictures of me when, I was working my first job. See, I look exactly the same, right? 30 years ago. But working my first job, and the bottom picture is a picture of me in my actual apartment, and my first apartment. And I lost out on opportunities because I didn't know what I was doing with my money. And I really just wanted to get those student loans off of me. That was the priority. But at the end, through trial and tribulation, work, studying, I got different securities licenses. I got, my MBA. I was able to become what I would qualify as a success story, where I decided to really fight to help women. And so that's why I founded my company, Empower Financial Wellness. And Empower Financial Wellness really is to help with the financial health of someone, because I firmly believe that if your financial house is not in order, the rest of your house is not going to be in order. I don't care what you tell me. So you've got to have control of over your money, and you want to have the financial freedom to do the things that you want to do in life, right? To enjoy life. You don't want to just live a life just to pay bills. Who wants to do that? So I founded my company with the objective of helping women attain their optimal sense of financial wellness. Now, one of the best ways to get to financial wellness is to invest. Invest to fast track your money growth. You are going to move much faster and your money's going to go from here to here if you actually invest it. And let's talk about that. So what happens when you actually invest? So this is a scenario of two people doing the exact same thing. Two people that started off with $10,000, and then every month, like clockwork, they're putting in $500 a month, $500 a month, $500 a month. The person in the purple at the end of 30 years has $145,000. Not a bad deal, right? Who doesn't want $145,000? But the person who's investing, and this is at a very low average rate of return, at the end of 30 years has $665,000. I don't want to say 666 because I don't like that number, but $665,000. So you can see that there's a $500,000 difference between person number one who's saving and person number two who's actually investing. That's how much of a difference. So if you had $500,000 more, wouldn't that make a world of a difference or change in terms of your future? I'm sure it would. Now, there are certain things, myths, that stop us from actually investing, that get in the way. And I kind of want to blow the barriers through all of that and make sure that we're clear so that those barriers are removed. So myth number one is that you need a lot of money to invest in the stock market. This is a misconception that a lot of my clients come in with and said, oh, Myrna, I need a couple thousand or something to begin my investing journey. This is false. Because with as little as $5 a day, you can make a difference in your future. If you start with $5 a day, the cost of, you probably spend more than that at Starbucks, frankly, right? Starbucks, we all know those tall drinks, whatever, venti, whatever they call them, they're expensive, right? Breakfast there is expensive. Everything's expensive now, right? $5 a day, or the cost of a $5 biggie bag at Wendy's. My kids like Wendy's. They don't necessarily like McDonald's so much, but they like Wendy's. $5 biggie bag at Wendy's. The cost of that, investing $150 a month, that makes a world of difference. So after 40 years, you'd have about close to $950,000 just doing $5 a day. You're not going to miss $5 a day. You're not. So you don't need a lot of money to begin your investment journey. Then there's the concept of what we call fractional shares. I'm not going to go into this too much, but it's your ability to buy into companies that might be expensive with whatever money you have. So let's say in this scenario, I have, Amazon at the time, let's say it was trading at $1,700. It's not trading at that price now, $1,700. And you say you only have $100. Well, you can buy $100 worth of Amazon. So you can participate in the ownership, because having a stock, buying a stock, is being having partial ownership of a company. So you can do that with the money that you have. And on top of that, you can open a brokerage account, because in order to start investing, you can't invest from a checking account. You got to have a brokerage account. And you can open a brokerage account with $0. You don't have to have a minimum. So that's important. So in order to get you started, so if you're not investing and you want to get started, or even if you are, it's good to know. These are top 7 best brokerage accounts from 2024. And on here you have Fidelity, Charles Schwab, E-Trade, Merrill Edge, Interactive Brokers, Robinhood, and JP Morgan. I really like Fidelity. Fidelity's a good one. Tried and true, reputable firm. They have good customer service where you can call them at hours of the night and they will answer any questions you have. But the key thing that I want to mention here is that you want a brokerage firm that offers what we call fractional shares. So that if you only have $100 and you want to buy shares of that company that's $1,700 a share, you can do so. So that's very important for you to know. So have the option of fractional shares. E-Trade, for example, does not have fractional shares. So that's a problem if you want to buy 1,700, and if the share is at 1,700 and you want to buy it and you only have 100, then you won't be able to do that with an account like E-Trade. So Fidelity is good. Charles Schwab is good. You want something that allows you to do fractional shares. Now, the other hint that I have here is if you are a single individual, head of household that makes $165,000 or less, or if you are married, filing jointly with your spouse, and your total income is $246,000 or less, you can open a Roth IRA. The Roth IRA is great because that's a retirement vehicle, IRA, individual retirement account. It's important because when you put money in there and the money grows, when you take it out at retirement, you don't have to pay taxes on the money that you've made, which is a beautiful thing. Now, if your income levels are higher than those two, then you can open a traditional IRA and kind of backdoor it, but we're not going to go into that. There are ways to kind of overcome that, but it has its income restrictions. But if you fall under the income threshold, highly recommend that you fully fund your Roth IRA. That's a good place to invest, after you've invested in your company 401k. Now, if your company has a 401k and it has a match, you have to invest at least the minimum that's going to get you the maximum match, because a match is free money. Nobody gives up free money. Now, so that's myth number one, that you need a lot of money to invest. We can see that that's not true. You don't need a lot of money to invest, right? Are we all convinced of that? If you're convinced of that, give me a yes in the chat, convinced, or give me a convinced. So you don't need a lot of money to invest. Myth number two, that you will lose all of your hard-earned money if you invest in the stock market. Now, that is for sure a myth. So here I kind of wanted to give you a historical view, and I don't know if you can see it, of market returns, S&P 500. That's a cross-section of about 506 companies. And you can see the ups and downs every year. So you might not be able to see it too well, but there were 3 years from 2000, 2001, and 2002 where the market went down. So the returns were negative. But outside of that, you'll see a negative year here, and then maybe 4 years of positive returns. So typically when the market goes down, it might go down a year. The 3-year period was the exception, but then it bounces back, and the periods of uptick tend to last longer than the periods of downtick. So in 2023, it was 26% return. In 2024, 25% return. Are you going to get that in a sleepy savings account? You're not. You're not going to be able to get that in a savings account. So, like I said, in 2023, if you had $1,000, that would have become $1,262. Say if you had $1,000 beginning in 2024, that would have gone to $1,250. So it would have definitely grown if you had invested in both years, a lot more than what you're going to get in a savings account. Interest rates are going down, right? So if you're in a sleepy savings account, chances are that rate is going down. And if you're not in a high yield savings account, chances are you're not even getting enough on your money. So if you're not getting at least 3% on your savings account, you need to talk to your bank. All right, so we've addressed myth number one, which is you need to have a lot of money to start investing. So we know that's not true. Myth number two, that you're going to lose all your money. Now, if you listen to your Uncle Joey, who gives you a hot stock tip, and you put all your money in there, you might lose all your money, but you're not going to do that, right? You're going to be more in tune with the market and be a little more reasonable. So we know that's not the case if you have the right support and guidance, and if you're in the right vehicles. So myth number three, you have to be a financial analyst and great with numbers to understand investing. So I, once upon a time, used to be a financial analyst. I worked for an investment bank. And I used to be that person that poured over financial statements to make recommendations to institutions to tell them, hey, buy this stock, sell this stock. Well, for the most part, buy, right? But you don't have to be that person, right? You don't have to be that person. So that's a myth. Here's a client testimonial of mine. I have a client, Dora. She was in the financial industry. And she says, 20 years in the financial industry, I never learned how to invest. I always had the advisor do it for me. I jumped on the chance to learn from Myrna because she didn't judge me for not knowing. Her approach was simple, down to earth, and so valuable. Just go learn from her. It's amazing to know how to invest in the stock market on your own. Another client, this was somebody, she had never invested a day in her life. She says, thank you for all the support and guidance you provided me. I'm an investor because of you. Other client reactions. My portfolio is now worth $33,000. So I've been doing good with putting money, and tech has been doing good. Another client said, Palantir is up 25% for me today. Well, if anybody owns Palantir, I don't know if you know about Palantir stock, but that stock went through the roof today, ironically enough. But this particular client was telling me about the investment choice that she made, and her portfolio is doing great now. And last client reaction, this is somebody who's not a numbers person, right? Is in human resources. And she said to me, I'm trying to not get addicted to this, so I'll pace myself. And I'm telling her, I'm so happy to hear that you're enjoying your investment journey. And she says, I am. I didn't think I would because I've always hated numbers, all caps, of all forms. So you don't have to be that person that's a financial analyst and that's crunching the numbers to enjoy investing in the stock market, to understand how to invest in the stock market, and to make money investing in the stock market. Okay? So I hope that we're clear on that myth, right? So we know, one, that you don't necessarily need a lot of money to start investing. We know that you're not going to lose all your money if you put it in the stock market. And we know that you don't have to be that super number cruncher financial analyst, know it all when it comes to financial statements to invest. Myth 4, that you can't afford to sit on the sidelines and take your time, that the stock market is going to wait on you. That's the definite myth. The stock market waits for no one. Now, this chart, I need to update it, but essentially, we had a company called NVIDIA, which I really love and is still doing well, relatively speaking, but not as well as it was, maybe a month ago, right? But it's a company that if you had invested in it once upon a time, a year ago, or let's call it back in 2023, you had invested $10,000 in NVIDIA as of October 31st, 2023. Today, you would have $29,500. That's in a little bit over a year. Now, not all stocks are like NVIDIA. Don't get me wrong. But that just goes to show you that, a good investment, a good opportunity will take your money far, right? Where else are you going to almost triple your money? So, but you have to know where to look. Now, a couple of resources. If you go to financeyahoo.com, you can find out a lot of information about different stocks and different companies. But if you're a little gun shy, you can go to investopedia.com, simulator, and you will see, right, where you can trade paper money. So not use your real money, but actually use a simulator to invest and see what happens and get yourself familiar with what's happening in the market. Now, you don't have to be so knowledgeable when it comes to analyzing individual stocks, right? You can invest in mutual funds or exchange traded funds, which are essentially baskets of stocks. So for example, if I have a mutual fund or an exchange traded fund, I can invest in multiple stocks. So I can invest in a piece of Amazon, Apple, Costco, Walmart, Nvidia. I can invest in a whole cross section of stocks. So I recommend mutual funds and exchange traded funds, particularly if you're new to starting in the market, but also if you want a broader view, right? That's usually the best way to invest, because there you're not necessarily risking your money in just one investment. So let's say you put all your money in Nvidia, that $10,000 example that I talked about. Yes, now you would have $29,500, but it went down. So if you had invested at a different point in time, then that could be a different story. But all your eggs are in one basket. You don't want all your eggs in one basket. So you want to diversify. You want to have a broad section. So a mutual fund or exchange traded fund, particularly an exchange traded fund that mirrors the market, the S&P 500. Now, if you're telling me, Myrna, I don't even want to go into all of that, you can go the option of robo-advisors. And what is a robo-advisor? Just what the name suggests, robot advisor. An investment company or bank, they will ask you, hey, give me a few questions. They might say, hey, Sarah, how would you feel if the market went down 10% and you saw your money go down 10% in one day? Would you take to the bet? Would you buy more? They'll ask you a series of questions, right? So that you can find out, they can find out what type of investor you are. And based on how you answer those questions, they will say, okay, invest in this particular mutual fund or invest in this based on how you answer the questions. And it's simply an algorithm, computer algorithm, that based on how you answer the questions will give you some results. Typically, robo-advisor returns, from my experience, have been lower than if you say you go pick your own investments, but they'll be better than you doing nothing at all. So it's something to consider when you're looking at, investing. So we've tackled 4 myths so far. The important thing is to get in the game. When you're in the stock market, you got to be in the game. You're not going to make any progress, no traction, if you don't get involved, if you don't start to invest. So some of those myths get in the way. Now, the final myth that I want to cover is that learning to invest in the stock market is complicated and it takes too much time. Now, let me ask you this. If you had to learn something, right, that was going to give you more money. So if you came from that scenario of getting $145,000 versus getting $500,000 more, wouldn't you put in some little time to give you that legacy of wealth? Would you say you have no time to make money? I don't think that's the case. So we've already said that learning to invest in the stock market is not complicated. You've seen me give you examples of people who didn't know how to invest, weren't investors, didn't have, a securities license, didn't go through that process, but learned how to invest, become investors. So you can take the time to learn that. So it's a myth that it's too complicated and takes too much time. So I want to talk to you a little bit about my program, which is a coaching program called Unleash Your Inner Investor, Investing 101. And what does that program do? It simplifies things, because I have seen it, right? I've worked my clients, I've done it myself, and I've seen what works and what doesn't work. And I work with a lot of busy professionals, people who don't have time to be, learning something for like 12 weeks, or don't have time to really be poring over books and understanding different things, right? So I've created this program for the busy professional who wants to learn what they need to learn. And I kind of give it an example of a car, right? When you drive a car, do you understand all the inner workings of inside that car? What's happening? I know I don't. I really don't understand everything that happens in the car, but I know I drive myself every day to and from work. So it's kind of the same thing with investing. You can know what you need to know in order to get you with a healthy investment portfolio. Now, When you sign up for my investing program, you're going to find out how to fast track your money growth. You're going to become confident and secure when it comes to your investment decisions. And then you're going to be able to boost your income without working harder. Who wants to work harder? Nobody wants to work harder. You want to make your money work for you, not the reverse. And you want to understand your unique investment style. You will understand that because investing is kind of like food. Some people like spicy food. Some people like a big, nice steak. Some people are vegan. But you've got to know what your investment style is, because what I invest in may not be what you invest in, because you may not be able to stomach it, or you may be guns a-blazing more aggressive than me, or you might be younger, have a longer time frame. But you've got to start off that way, because you can't just go invest in anything without understanding what your investment style needs to be. Then when you sign up for my investing program, you're also going to have access to a live Q&A call every month. So every month, as long as you're enrolled in the program, we have a live Q&A. You can come ask your questions to me in person. Then once you're done with your modules, you have access to me in a live one-on-one session with me, just me, where we go through your own personal situation. So if you have your 401k accounts, bring them. If you have your brokerage account, bring them. If you had the kids 529, bring them. We'll take a look at everything. And then your investment, what you've been thinking about in terms of investment recommendations. And we'll go through those, right? What you're thinking and what your logic is. Does it make sense in light of your goals? You get a sense of instant community, because there are women who are in the community, right? And it is a community of women. Sorry, men, that this is pretty much a community geared towards women in terms of the coaching program. And then you have easy to follow lesson modules, right? Where there's 5 of them. And once you get through them, then you schedule your call with me. But you also have 30 days unlimited Voxer or Facebook Messenger access to me, which means you can ask me all of your questions while you're going through the information, unlimited. Just give me 24 to 48 hours to respond. And then last, you work at your own pace, right? So one of the frustrations is that sometimes as busy individuals, you don't have that Friday night at 7:30 or that Thursday night at 7:30 set up every week for 6 weeks, 12 weeks to go through something. You just don't have that time because you got different competing priorities. So this is a work at your own pace program where you can pick it up as soon as you sign up. You can start. You'll get access to the information. What makes this different? You might say, well, Myrna, I heard about these investing programs and, I don't know. What makes you different from the rest? Well, what makes me different is, I have 30 years of experience in the finance realm. I have done this. I have done this with, multiple clients who don't have the investing background, who have been successful. As chief financial officer of, a network of about 90 charter schools, I do have expertise in the realm. So you have access to me for all of your questions. So that expertise is different, right? I'm not just someone who said, okay, I started investing and let me just, pull up shop and, become an investing coach. No. 2 is the implementation call. Because a lot of times you just have the program, you have the technical aspects, they give you the materials, but who's going to make sure that you do what you set out to do when you bought that program to begin with? So that's my job, to make sure that you actually implement and that you have some form of investment going on autopilot by the time we're done. Because that's when my job is done, when I make sure that you're actively investing on a recurring basis. Because in order to be successful as an investor, you need 3 key things. The magic formula for success when it comes to investing. 1 is time. More time you have, the better, right? You can take advantage of the growth over time. 2 is consistency. You got to be consistent. You can't just say, oh, let me put $1,000 here and then come back to it 10 years later. No, if you put $1,000 today, you have to commit to putting some money aside month after month after month after month, where you're buying and buying and buying and buying and growing your portfolio over time. 3 is a good rate of return. So as you saw, 7%, 10%. 10% can mean you growing your money at a faster clip. You double your money at a higher rate. And then I break down the jargon, right? A lot of times the terms seem a lot more complicated than they actually are. They're not really complicated. So I break down that jargon and give you that understanding. You will become an active investor and you will know what to look for to make your own investment decisions. So why now? The sooner you start, the sooner you grow your money, right? Tomorrow isn't guaranteed. And a lot of times I realize I've had some moments in my family where that tomorrow gets here a lot faster than we realize. And so waiting means you're risking your financial future and you're leaving money on the table, frankly. So don't leave money on the table. The link is the link, and I'll put it in the Barter Black site, is the link to the coaching program where there's all kinds of details and information about the program for your leisure, when you can start. And you can also pick up this QR code right here. As soon as you sign up, you can start. So if you have any questions at all that we're not picking up in this live, please feel free to book a call with me. I have free investing strategy calls where if you want to figure out how to get started on your investing journey, I am available to hop on a call and we can talk a little bit about how to get you started. All right. Well, Barter Black, it was an absolute pleasure to be here this evening. Let me see if there are any questions in the chat. I don't see any, but I will probably circle to the different channels that Barter Black is actually live streaming on to make sure that no one has any further questions. It was an absolute pleasure to be here. It's Black History Month. It's February. There is a racial wealth gap, right? We all know that. There's a racial wealth gap. So let's go out there. Let's go out there and pursue our wealth. Wealth is our birthright. Just like everybody else, wealth is our birthright. So we should go out there, get the wealth. The stock market represents a wealth building opportunity that we should be taking advantage of. All right. So thank you, everyone, for being here and for listening in. And if you're tuning into the replay, thank you so much. And happy investing, everybody. Good night.